to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Well, it was a celebration, a Bay Area celebration, kind of like when the 49ers were winning Super Bowls with Bill Walsh as their coach and Joe Montana as their quarterback back in the 80s. Yes, sir, it was glory days, kind of like made you feel good to be part of the company if you owned a little bit of it that Steve Jobs founded, Apple. Apple blew away expectations for quarterly performance. Take a look at it here. EPS came in at $12.30 per share. Analysts were looking for $10.04. Absolutely smoked it. Revenue came in at $39.2 billion, higher than the $36.7 billion looked for. And that's 11.8 million iPads sold. That's 151% up from last year. 35.1 million iPhone 4Ss, or actually iPhones altogether, but most of them 4Ss. This blew away the street, and the stock, which was down to $560 on Tuesday afternoon, rocketed as high as about $620 today, but it closed $610, up a nice $50 per share. Not bad in one day for Apple. You can see it rested at the 50-day moving average, and boom, on big volume, moved up higher on the news. The big beatdown from Apple had a big spillover effect. It's like free drinks for everybody in the bar who's drinking the QQQ. QQQ holds the biggest non-financial names in the NASDAQ, stuff like Intel, Oracle. Apple is almost 20% of the weighting, and this was up 2.66% today, the QQQ. Ooh, whoa. Aha. It's only a spider representing the S&P 500 SPDR spider. That sucker was up 1.4% today. Has a little bit less of a weighting than Apple than the QQQ. Not everything was great. Actually, Baidu came out. Baidu was down after hours on Tuesday. You thought the stock was going to flop. EPS and revenue beat expectations, but the company gave bad guidance. The stock was down, but it ended up closing just 0.68% lower, bouncing off the lows. You can see these are called candlestick charts. The height of it represents how far the stock moved today, and it was moving quite a bit. Baidu still looking fairly decent. It fell a little bit, though, prior to that. Exxon is coming out with earnings. They did come out with a dividend increase of 21%. Going to be paying 57 cents per share per quarter. Nice little stock there, yielding about 3% and change right now. Move off the bottom. Exxon reports earnings on Thursday, so check them out. All this excitement about earnings and gas prices and stuff like that. Ben Bernanke actually had a press conference after the FOMC after the FOMC meeting, I should say. He said, the economy is growing moderately. We're not going to do anything different. But there's a creeping suspicion that the rates will be coming up sooner than expected because we're growing decently in this country and housing may have bottomed. But we still have trouble over in Europe. The Dutch government collapsed over the weekend because they couldn't agree on austerity cuts. You've got an election in France where you've got this gentleman right here, François Hollande, who says no austerity. Think about it. If you want to run for office in Europe, all you got to do is say, I don't want austerity, and you have a good chance of being elected. Of course, Mr. Sarkozy is trying to hang on to his job. Angela Merkel, the Chancellor of Germany, is trying to keep her partner in this whole cleanup of Europe there. She wants people to go through austerity, to tighten their belts, to raise taxes, things like that. Hollande and others in Holland and elsewhere are arguing for more Keynesian tactics, government spending to help spur the economy. But gold today didn't mind what Ben Bernanke had to say. Initially, it went down because gold, what does it hate? It hates positive real interest rates. It loves when real interest rates are negative or falling. And this is the GLD, up 0.2%. Oil been creeping up for about 2 weeks to $104 per share for West Texas Intermediate crude, per barrel, I should say, up about 0.4% today. And you've got the Exxon earnings, which is a little play on oil, coming out on Thursday.